So the Toronto and GTA real estate market isn't exactly seeing the boost in the spring market that most people were hoping to see. And I think most people were expecting this huge spike in activity, but the numbers didn't exactly show that. So in this video, I'm going to go over the numbers and also provide some context into why I feel that this spring market is not going to be the hype that everybody was expecting it to be, and why I feel that this market is going to be more of a balanced market in the spring, and dare I even say, maybe leaning slightly towards a buyer's market. And make sure to watch this video till the end, because I will be talking about where I feel that the golden opportunity lies, especially if you're a buyer right now that's on the sidelines. My name is Sid Sir with Team Sir Real Estate. I help clients with buying, selling, leasing, investing, as well as pre-construction condos. If this is your first time, please go ahead and hit that subscribe button for all things real estate related. So before I get into the numbers, I do want to provide some context into where we are right now, but also where we're coming from. Let's maybe take a step back and look at exactly a year ago where we were, right? March of 2023. So exactly a year ago, the year started out with January's first rate hike, and that was a rate hike of 25 basis points. And this is particularly important because up until that point, all of the rate hikes prior to in 2022 were either 50 basis points, or we saw the 100 basis point increase that we saw in July 2022. And the reason that the 25 basis point in January is important is because at that time, people were really thinking that, the Bank of Canada is now going to stop rate hikes and potentially start cutting rates, because 25 basis point didn't seem like a big impact. Both buyers and sellers were feeling pretty optimistic about the market, given that, 25 basis points, we're used to 50 basis points, 100 basis points. Things are only going to get better from here. So we started seeing this rally in the market. And then come March, there was a rate pause, the first rate pause we'd seen from the bank. And then in April, there was another rate pause. And what that created was this absolute frenzy in the market, because people thought the rate cuts are coming, the bank's done raising rates, and let's go out shopping. Sellers started putting their homes up for sale. So if you look at this chart here, we see February of 2023, where we saw from Jan to Feb a 5.48% increase, 5.5% increase month over month of price, and then onto March, and again April, and then again May, because again, in March and April, we had the rate pauses, and in May, we saw the absolute peak and crazy market conditions, and we peaked at $1,196,000 as the average sale price. And of course, in June, we had a rate hike again, because the Bank of Canada saw the absolute frenzy in the market. Inflation numbers had come in, spiked up pretty high, and they started raising rates again. So in May, we really saw the peak, and from that point, we started seeing this decline in prices again because of the interest rates, and the market more or less came to a complete screeching halt again. Now, let's fast forward to March of 2024, which is about a month ago, and the latest numbers show a different picture. Again, let me provide some more context. We've had, since 2023 September, 5 consecutive rate pauses, okay? No hikes, no 25 basis point hikes, but rate pauses. So people were really expecting a lot of activity this spring, especially in the start of spring around March, this month to be absolutely crazy. But if we look at the numbers, the average sale price came in just about a percentage over March of 2023 is at $1,121,000. Sales actually went down from last March almost over 4.5% to 6,560. New listings, believe it or not, spiked up 17%. So what does that mean? It means that although we had this supply of new inventory come into the market, there was still enough competition within buyers to absorb that inventory. However, not what we're expecting in the spring, because if you look at the sales to new listings ratio, it's only at about 50%. And if you look historically over the last 5 years, we've consistently been over that 50% mark when it comes to sales to new listings ratio, or the absorption. And that further you can see with the months of inventory, which is another measure of the absorption rate of if no new listings were to come on the market, how long it would take for the existing inventory to sell. We're sitting at just under 2 months of inventory right now, which technically is considered a seller's market. But then if you look at, again, the last 5 years of March data, we've consistently been around well below the 1.5 months of inventory. All this to say that this spring market didn't exactly spring up to the action that most people were expecting. Now, there may be an explanation for why the absorption rate for the past month has been quite low, and that explanation lies in the property type, namely condos. The condo market at this point has had quite a lot of active listings compared to exactly a year ago. March of 2023, we had about 3,930 active listings and about 2,121 sales in all of the GTA on all the TRREB areas. Whereas in March of 2024, there's over 5,834 active listings with only 1,842 sales. So a lot lower sales of condos this past month, but a lot more inventory than last year. Also, a lot more new listings than last year. Last year, we had 3,600 new listings, and this past March, we had 4,292. So a lot more condos on the market. So why is that happening? If you remember last year, the rental market was absolutely on fire, right? And condo owners, particularly investors, were putting their condos up for sale and not getting the price that they were expecting. And because the way rent prices were going up, a lot of these investors decided instead to put their condos up for rent. And now, because we're seeing the market slightly have an uptick in buyer activity, a lot of these condo owners have decided to now put their condos up for sale, especially because a lot of them have, for mostly those who have renewals coming up this year, because they're with their new rates at the renewal, they're going to be very much negative cash flow after they collect rent. So this oversupply of condos in the market, specifically in the city of Toronto, has caused a lot of this surplus in inventory that's not being absorbed. And that's really bringing down the overall average of the absorption rate. And we can see this again with the numbers. The months of inventory in March of 2023 was sitting at about 1.8 months of inventory. In March of 2024, last month, it's sitting at 3.16. So again, inventory being absorbed a lot less, more than half than last year. Now, having said all of that, there's also certain pockets in the GTA that are experiencing multiple offers at this time, where sellers are finding themselves with the upper hand and listing their property below market value in order to generate multiple offers. Not all neighborhoods are experiencing this. In fact, I've got a data here to show from Wahi that talks about the percentage of GTA neighborhoods in overbidding and underbidding territories. So again, let's go back exactly a year ago. There were a lot more neighborhoods in underbidding territory than overbidding territory. And as the year progressed, especially towards the middle and end of last year, the second half of last year, we really started seeing a lot fewer neighborhoods that were in quote unquote overbidding territories. And then of course, now we're seeing that trend reverse, where we're seeing more neighborhoods, almost half of all neighborhoods in TRREB areas, TRREB meaning the GTA, the Greater Toronto Area, being in overbidding territories. Now, just to clarify, this is specifically happening in the low-rise market, namely detached, semi-detached townhouses and not the condo market much, and also happening in very specific neighborhoods. And more importantly, just because the neighborhoods do have or do fall into that overbidding criteria doesn't necessarily mean that every single home in that neighborhood is selling for over asking price. And of course, at this point, everybody should be aware that list price does not equal market value. Because just because a homeowner decides to list their property way below what it's actually worth doesn't mean that that's what it's actually going to sell for. So in most of these cases, the seller's strategy is to underlist the property by 15 to 20% in order to generate a lot of traffic and potentially multiple offers. And this is a very common strategy we see in a market where the sellers have the upper hand. So again, context matters when it comes to buying or selling real estate, depending on what property type and which neighborhood you're in, and of course, your specific circumstances. So if you're interested in learning more about, whether or not this is the right time for you to list or for you to buy, feel free to book a date and time that works for you by clicking the link in the calendar, and I'll be happy to speak to you one-on-one. Now, as promised, I want to talk to you about the golden opportunity that lies in this market, and that is specifically the assignment market. Now, I've talked about assignments extensively on my channel, and I've got a video here breaking down exactly what assignments are and also a step-by-step process on how to go ahead and secure assignment deals. But assignment markets right now are still in an oversupplied market where a lot of the sellers are willingly walking away from their deposits in order to get out of the deal. And we're doing deals on a weekly basis where we're helping our buyers secure properties that are way under market value and they're going into baked-in equity. Having said that, the assignment, gravy train is also not going to last very long, because as interest rates start to fall towards the middle and end of this year, we're going to start seeing a lot of these inventory in the assignment market slowly being absorbed and the original buyers opting to close instead of sell. So right now we're still in that market where as a buyer, you will have an advantage to go in and buy something for severely under market value. So if you want to learn more about assignments, make sure to watch one of my videos that I'm going to link in the description. And if you have any questions about that, again, feel free to get in touch with me and I'd be happy to chat. Thank you guys for watching. If you found any value in this video, please make sure to go ahead and give it a like. And if you haven't already subscribed, please go ahead and do so. Thanks for watching. Take care.